Hey guys, Josh Olfert here, back with another video for you guys today, and we're gonna talk about something a little different. We're gonna talk about how I make money as a financial advisor. Maybe you're curious how your advisor makes money, or how you might make money if you wanna do this as a career for yourself. And who better to talk to than someone who does that every day? So I want to tell you a little bit more about how it is that I make money in this career. So you may have heard of all these different stories and in popular culture how people in finance can make a lot of money. You have things like hedge fund managers and investment bankers and all these different roles where people make serious amounts of money sometimes. And this is the interesting dynamic about the world of finance, is that it attracts people who really like money. I mean, at the end of the day, you don't really get into finance unless the idea of money and working with money attracts you. So this is the difficult thing about it, is that people who are trying to help you with money are often very interested in having money themselves. And for me, this is no different. I think money is sweet. I'll come out there and say, hey, I think being able to live the lifestyle you want and have all those things that you want and be able to build the life that that you're excited about, money is required for those things. So I'm not gonna pretend as if I don't like money. But I think at the end of the day, trying to live a fulfilling life, or a life that is very exciting to you, is very difficult if you don't have the basic needs met. So that's why I feel like money is actually more of an important thing than people really give it credit to. But anyways, I want to talk about how it is that I make money as a financial advisor. And at the end of the day, I'm not an investment banker. Those people are the people you see on Wall Street who work super long hours, and they help major companies get funding. They help major companies raise money and get investors and all sorts of things like that. There's also people like investment managers who literally take on hundreds or thousands of clients and help them physically directly invest in things like hedge funds or private equity funds or things like that. But for me, what my job is I'm a financial planner. And what that means is I meet with individuals. I'm not working with massive businesses. I'm working with families and people who want to get started with investing or want to get started with all sorts of different financial strategies. And the reality of the situation there is, just like in most businesses, finance is the kind of business where it takes a lot of time to build something. And I think that, like in any other business too, the highest performing people make a lot of money, whereas the lowest performing people either find something else to do or don't survive. It's one of those careers where not everyone is the same. People who do really well, and people who don't tend not to stay around. So luckily for me, the last 4 or 5 years of my career has been doing all that grunt work, has been building the business, so that now I can kind of spend more time, or I can spend less time trying to find clients or trying to find business, and I can spend more time working with those clients or going golfing, which I love to do, but yeah, sadly, it's just one of those things that, that's silly, I don't have to include that. Which is actually really funny, because I believe there is a study out that says the better you are at golf, or the more you golf, the worse you are at your job. How is it that I actually make money? Well, I would say for my company specifically, by far, the largest thing we do that generates revenue is manage people's investments. That is really the biggest piece. And the way that works is I get paid a percentage of the assets that I manage. So let's think of it this way. If a client comes to me with $100,000 to invest, and they're thinking about, they want to buy a home, or they want to invest for retirement, or all sorts of things, at the end of the day, we are going to charge a fee in order to do that. And for me, what that ends up being is about 1% or a little less than 1% of those assets. So using that same example, someone comes to us with $100,000, we're gonna help that client figure out a strategy, we're gonna build a portfolio for them, we're going to service them throughout the years, and we're gonna get paid about $1,000 per year. So that's kind of how it works. And I would say for most financial advisors, for most people in this business, the way they make money is a percentage, or around, you could think about 1% of the assets. So you don't just make that money on one client, you might make it on 10 clients, or on 100 clients, or on 1,000 clients. People talk about the size of their book, or the size of their clientele, as the total aggregate, the number of assets they have between all of their clients. Some advisors have insanely massive books with tons of clients, and they've been in the business for 20 or 30 or 40 years, whatever it might be, and they might have $100 million that they're managing. That happens. Like, there are many people in each city who manage around $100 million. Now, what that means is 1% would be equal to $1 million a year, which is pretty crazy. That's more money than anybody needs. And I think that that is where the stereotype of financial advisors being successful or making a lot of money comes from, because you have some very high performing people who can make $1 million a year or more. And that's just one side of the business. That's just managing investments. So for me at Haven, at the firm that I run, I would say most of our money comes from managing investments and earning 1% on the assets our clients have invested. Now, we're nowhere close to 100 million. And to be honest, we would need to be much bigger to accommodate that sort of thing. We would need to have more staff and more people. So although we would be making more money, we would actually have much more to do, and we'd have a lot of things we would need to incorporate into our business to make that happen. Secondly is financial planning fees. So financial planning fees are just fee for service that you charge to someone to have some sort of planning done for them. Let's say someone wants to learn more about projecting out their retirement, or they want to learn how much do they need to save every single month so that they can retire, or they want to retire tomorrow, how much can they take out each month in order to do that. Charging a financial planning fee, you can charge $500 or $1,000 or something like that as a one-time fee to have, to give somebody that value, to give them some sort of projection or something like that. So for us, financial planning fees are definitely less of a share of our earnings. I would say that's probably around maybe 5% or even under 10%. So that's not a massive piece of what we do, but we see that in the future, the industry could go that way. So it's something that we're thinking about more and more. The third way that we make money is through sales of insurance. Now, when you're going through your life, you experience different events that can completely derail your investments or your financial planning. One of them might be you get sick and you can't work for a period of 3 or 6 or whatever it is months. And because of that, you're gonna have to withdraw from your investments. And all sorts of different risks, like somebody dying or somebody not being able to work, can really derail your investments, right? So what we do is we also help distribute and sell insurance so that people can protect their financial plans and protect their investments. And typically the way somebody gets paid on in insurance is they'll make about 120% of the premium on someone's policy. So let's think about it this way. Someone has $100 per month in putting into some sort of life insurance policy or some sort of insurance policy, whatever it might be. That's equal to $1,200 a year, right? So if you were to sell a $100 a month life insurance policy, that's $1,200 a year, and the advisor would probably make about $1,400 on that. So there is definitely a very large benefit for advisors to sell insurance. They make a lot of money doing that. And for us, our clientele is very young, right? So not as many of them need insurance, and we're not the kind of people that really like to push it on somebody else. But it is certainly the case that if you are an advisor who does a ton of insurance work, you're probably making a lot of money up front, right? You're probably doing pretty well for yourself there. So I would say insurance probably makes up a much smaller part than our investments do. Probably 20 to 25% of our overall revenue will come from insurance. Now, the last way we can make money is that we work with people who want to get property, right? One of the major financial services people interact with over the course of their life is their mortgage. So if you want to go and get a house, the odds you can afford to buy the whole thing up front in cash, pretty much zero. Nobody, well, I mean, some people, but very few people buy an entire house in cash. They go out and they get a mortgage from the bank and they pay off that loan over time. Now, a financial advisor who can help get their client a mortgage typically gets paid 1 to 3% of the mortgage balance. So if someone comes to us and they say, hey, I need a mortgage for a house, it's gonna cost me $500,000, we would make $5,000 on that, So that's a serious thing as well. These transactions like mortgages and insurance are really what a lot of advisors are trying to peddle. They're trying to push those things because they bring them this massive upfront commission, right? Whereas Haven, our model is more so focused on helping people plan for their investments. So although we probably are leaving a lot of money on the table by not pounding home the ideas of getting insurance and pounding home the ideas of getting people mortgages and all that sort of thing, it's not really where we're passionate. It's not really our specialty. Our specialty is thinking more about helping people build wealth and helping people get invested and make sure their portfolio is right for them. So between those 4 areas, if I could break it down, at Haven, for me personally, or for most advisors focused on investing, I would say 80%, probably 75 to 80% of our sales or our revenue for the year will come from managing investments. And we here manage about $10 million, around that amount. So we'll take 1% on that, and that's a large portion. And then from there, we'll also incorporate things like insurance, where we might make 10 or 20% of our revenue, and then mortgages and financial planning fees much smaller. So that is really the way that a financial advisor makes money. At the end of the day, this business isn't nearly as lucrative as it once was. If we think about how the compensation structures worked in the 1990s or the 1980s, for me, I've thought about this. If I had been in this career and taken on the amount of clients I've had, but I was in the 90s or I was in the 80s, I probably would have made 5 times the amount of money. And I think that's something that we're gonna start to see. A lot of these businesses where there was a ton of money in them, let's say, being in used car sales or being in finance or being in insurance, a lot of these things are being automated, and a lot of them, the margins are declining because most of the money in today's world and most of the profit margins are going towards technology companies. So companies who are helping automate financial planning, or companies who are helping automate all these industries that used to be insanely profitable, the money is starting to flow towards them. And you know what? Am I upset about this? Am I sad whatsoever that I would have made more money in a different, life in a different decade? Not at all, because I get to leverage social media, which people didn't have in the 90s. And that allows me to get a bigger brand and more clients and all sorts of things. So if you're thinking about a career in this, or if you're just curious about what your advisor makes, it's certainly less than it used to be, but they have way more tools at their disposal to make their job easier and to make just as much money, because they have more volume and they have more access to more people. So anyways, guys, that's kind of the general idea of how an investment manager or financial advisor makes money. They're making it on investments, they're making it on insurance, they're making it on mortgages and things like financial planning fees, which are becoming a little bit more popular. So all in all, that's really how money is made in this business. And I hope that you guys learned a little bit more so that you can, understand how it is that your advisor's getting paid, or if you're a client of ours, how we're getting paid, right? So at the end of the day, that's something that's really important to know. So that's it for today, guys. I hope you learned a little bit more about how your advisor is paid and how someone like me is paid. And if this is a career you want to do, learning a little bit more about how you might be compensated and how you could build a business of your own doing this. So if you like videos like this, please hit that like button, subscribe, turn on those post notifications so you can get more videos just like this one every single week. Until next time.